Welcome, traders and market enthusiasts, to another illuminating episode of the Mission Winners Podcast. I'm your host, Owen Larson, and today we're embarking on a journey through the intricate landscape of trading psychology. Our focus? Psychological resilience, mastering the art of discipline in uncertain times. I want to paint a picture for you. Imagine standing on the deck of a ship in the midst of a storm. The waves are crashing, the wind is howling, and the sky is dark with roiling clouds. This tempestuous scene is not unlike the volatile markets we often face as traders. Just as a seasoned captain relies on their compass and charts to navigate treacherous waters, we too must have our own tools to guide us through market turbulence. One such tool, a beacon in the storm if you will, is our market bottom identification strategy. At Mission Winners, we're always on the lookout for signs of a market turnaround. One particular pattern we found invaluable is the higher-low setup. Picture a chart where each trough, while still descending, doesn't quite reach the depth of its predecessor. This subtle shift can be the first whisper of a changing tide, a potential harbinger of market recovery. Now let's dive into the core of our topic: psychological strategies for maintaining composure in the face of market volatility. First and foremost, we need to address the elephant in the room, the cacophony of market noise. In today's hyper-connected world, we're bombarded with a constant stream of financial news, expert opinions, and market predictions. It's akin to trying to hear a whisper in a crowded stadium. This overwhelming influx of information can easily lead us astray, tempting us to deviate from our carefully crafted trading plans. But here's the crux of the matter: your trading plan isn't just a set of rules, it's your North Star. It's the culmination of your research, experience, and strategic thinking. When market chaos threatens to sweep you off your feet, your plan serves as an anchor, keeping you grounded and focused. Consider this: would you change your route mid-journey just because you encountered some turbulence? Probably not. The same principle applies to trading. Stick to your course, trust in your preparation, and let your plan guide you through the storm. Now let's delve into the realm of fear and anxiety, those insidious emotions that can cloud our judgment and lead to rash decisions. Picture this: you're sitting at your trading desk, watching as the markets take a sudden nosedive. Your heart races, your palms begin to sweat, and a knot forms in the pit of your stomach. The urge to sell everything and cut your losses becomes almost overwhelming. This, my friends, is the face of trading anxiety. But here's where the rubber meets the road. Managing these emotions isn't just about willpower, it's about creating a holistic approach to your trading lifestyle. I think of it as building your own personal Zen garden in the midst of market chaos. For some, this might mean starting each day with a meditation session, allowing the mind to settle and focus before diving into the day's trades. Others might find solace in physical exercise, using the endorphin rush from a morning run to clear their heads and sharpen their focus. One technique I've found particularly effective is the practice of mindful breathing. When you feel anxiety creeping in, take a moment to focus on your breath. Inhale deeply for a count of 4, hold for 4, then exhale for 4. This simple exercise can help center your mind and prevent fear-driven decisions. Remember, a calm mind is a clear mind, and a clear mind makes better trading decisions. Now let's shift our focus to the art of setting realistic expectations and goals during periods of market volatility. Imagine you're an archer. In calm conditions, you might set your sights on the bullseye, confident in your ability to hit the mark. But in high winds, you need to adjust your aim, accounting for the external forces at play. Trading in volatile markets requires a similar adjustment in expectations. It's crucial to recognize that downturns are not permanent states, but rather cyclical phases in the grand tapestry of market movements. By zooming out and focusing on the bigger picture, we can avoid getting caught up in short-term fluctuations. This is where the power of patience comes into play. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." These words ring especially true during market downturns. Consider implementing a scaling strategy during these periods instead of making large, all-or-nothing trades. Consider breaking them down into smaller, incremental positions. This approach allows you to average into positions over time, potentially benefiting from price fluctuations while minimizing the impact of short-term volatility. Now let's turn our attention to the wisdom of seasoned traders who have weathered many a market storm. Their experiences serve as both cautionary tales and beacons of hope for those of us navigating choppy waters. Picture a bustling trading floor in the heart of Wall Street circa 2008. Amidst the chaos of the financial crisis, we find Bob, a veteran trader with over 2 decades of experience under his belt. The air is thick with tension, screens flashing red as markets plummet, but while others around him succumb to panic, Bob remains a picture of calm focus. You see, Bob had seen this movie before. He'd lived through the dot-com bubble, the aftermath of 9/11s, and numerous other market disruptions. Each of these experiences had been a building block contributing to the robust trading plan he now relied upon. As the crisis unfolded, Bob didn't just survive, he thrived. His secret? A laser-like focus on identifying quality stocks forming higher-low setups, while others were selling in a panic. Bob was methodically building positions in fundamentally strong companies that were showing early signs of bottoming out. Bob's story teaches us a valuable lesson. Experience, when coupled with discipline and a solid strategy, can turn market crises into opportunities. But what about those who haven't had the benefit of decades of experience? For that, let's turn to the story of Sarah, a trader who found herself at the epicenter of the dot-com bubble burst early in her career. Picture Silicon Valley in the late 90s, a world drunk on the promises of the internet age. Tech stocks were soaring to dizzying heights, and it seemed like the party would never end. Sarah, fresh out of college and armed with a degree in finance, had jumped headfirst into this exhilarating world of trading. Then, almost overnight, the bubble burst. The NASDAQ, which had climbed to stratospheric levels, came crashing down. Many of Sarah's colleagues, caught up in the euphoria, saw their portfolios decimated. But Sarah, despite her relative inexperience, had an ace up her sleeve: emotional intelligence. She recognized early on that her biggest enemy wasn't the market, but her own emotions. Fear, greed, panic, these were the true threats to her trading success. So while the tech world burned around her, Sarah embarked on a journey of self-discovery and discipline. She developed a comprehensive trading plan, one that accounted not just for market movements, but for her own psychological tendencies. Meditation became a cornerstone of her daily routine, helping her maintain clarity amidst the chaos. She also took up running, using the physical exertion as a way to burn off stress and anxiety. Armed with these tools, Sarah was able to navigate the downturn with a level head. She avoided the panic selling that claimed many of her peers, instead using the crash as an opportunity to build positions in fundamentally strong companies that had been unfairly punished by the market. The result? When the dust settled and the market began its slow recovery, Sarah found herself not just surviving but thriving. Her disciplined approach had paid off, setting the foundation for a long and successful trading career. These stories, while unique in their details, share a common thread: the power of psychological resilience. They remind us that success in trading isn't just about understanding markets and developing strategies. It's about understanding ourselves, managing our emotions, and maintaining discipline in the face of uncertainty. As we wrap up today's episode, I want to leave you with this thought: market volatility is not just a challenge to be overcome, but an opportunity to be seized. By developing your psychological resilience, you're not just protecting yourself from downturns, you're positioning yourself to capitalize on the opportunities they present. Remember, at Mission Winners, we always have a plan in place to identify market bottoms. Keep your eyes peeled for those higher-low setups. They might just be the key to unlocking significant gains in the recovery phase. Thank you for joining me on this exploration of trading psychology. I hope these insights and stories have provided you with valuable tools for your own trading journey. Remember, every market storm eventually passes, and it's those who stay disciplined and focused who emerge stronger on the other side. Stay tuned for our next episode, where we'll continue to equip you with the knowledge and strategies you need to thrive in the world of trading. Until then, keep your mind sharp, your strategies honed, and your eyes on the horizon. This is Owen Larson, signing off from the Mission Winners Podcast.